Welcome back. As promised, let's get chatting with the management of Rajratan Global Wires. The stock dipped on Friday by almost 6-7% post the numbers reported by the company, and today as well is lower. It was a weak fourth quarter with the revenue as well as margins were under pressure. The revenues fell by about 11% year on year. And we have with us Mr. Sunil Chordia, who's the chairman and managing director of the company, to discuss these results, more importantly, the outlook going forward. Thanks a lot, Mr. Chordia, for joining in. You had said that, on a full year basis for the full company, your volumes will be flat, and flattish they were, a mild negative tinge, though we saw further weakness in Thailand. Just wanted to understand your prognosis for the next year. You had earlier guided for 15 to 20% sort of volume growth. If you could tell us, how much would come from India, how much will come from Thailand, and is there a strategy shift that you're doing in Thailand? Would that come at the cost of margins?
Yes. So, yes, I agree with you. Last year, the business had degrowth in Thailand for reasons well known to all of us. It was geopolitical problem in Europe, which had a pressure on the overall requirement of tire companies. So we could not achieve the targeted volume. We were short of even previous year's volume. And we did do better in India. We grew by 5,000 tons. Which was also not enough. But going forward, we have some learning from last year. And, we have aggressive plans. We have started an office in Europe to market our products. And we are targeting 40,000 tons volume from Thailand and 70,000 tons volume from India. This translates into 20% volume growth for current year for us.
All right. So 110,000, Mr. Chordia, is what we're going to be working with. We get that. That will be a good growth. So let's see whether or not you can achieve that. Now, on the margins front, things have been a little bit wobbly, so to call it. You're down to mid-teens odd. But you had told us earlier that you were looking at volumes, blended margins, I think of close to around 18 to 20%. What is the realistic number going by the current operating leverage that will play out, as well as, the other measures that you've taken? And a quick word, I derived your Thailand margins. For the past quarter, they had come down to sub 10%.
Yes.
Will things recover from year on for that division as well?
Yeah, so, Thailand last quarter was the worst. The overall EBITDA margin for the year was 15%, but last quarter was below, 10%. And also the volumes were lowest. So because, the customer contracts are for quarter. If you lose the business, you lose the business for the entire quarter. So we have taken some corrective measures now for current quarter, and the visibility for the year is very positive. We couldn't supply the required quantity to our biggest customers Sumitomo last year, which has come back with big volumes. We have got some new approvals from Korean customers, so we'll be doing business with them. And overall, my projection for EBITDA margin in Thailand will be around 15%, and for India around 20% this year.
So blended will be how much? Around 18%?
Blended or consolidated 18%.
18%. All right. Just one more question, sir. On your Thailand market share, in the presentation, you're still talking about mid-20s. But I believe in the last quarter, there were imports, there were Chinese that were supplying, at lower cost. And that's why market share got hit. What was the market share for the last quarter in Thailand? In India, I think it's around 45%.
No. So last quarter, we were hit in the margin as well as in the market share. So last quarter, market share came down to 18%. And overall for the year, it was 24%. Which used to be 26% before last year.
Right. So just wanted to understand, going forward, will you get back to that 24%? Will you increase your market share? By when?
Definitely. We have had discussions with customers, and we have taken corrective steps, whatever was required. And this year, the market share will be beyond 26%.
Just wanted to understand your thoughts on margins once again. You have guided for 15% margins in Thailand, but then this at a time when you are increasing capacity, this at a time when you are facing competitive challenges, this at a time where you're facing geopolitical risks as well. Are you confident of the volumes and the margins that you're guiding for in Thailand in such situations? or do you think there is a bit of a downside risk?
No, there is no downside risk. This is very carefully calculated number. I'm talking based on the approvals, new approvals, and the business has started in this quarter. I'm based this, and the geopolitical problem has also become like normal. Today, whatever it has affected, it has come to a standstill situation.
Yes.
So European purchases have gone up. We are able to export some quantities, and our customers are also able to export bigger quantities to Europe and America. So this should be possible.
All right. We're going to track this closely because last year you scaled it down a little bit, but this year you seem to have taken everything into the price, and then you're giving that guidance. So, Mr. Chordia, the reason we're asking you these questions is because last year you did an EPS of around 20 rupees. The stock is still around 800 rupees. Even after such a sharp correction, it's trading at around 40 times. The hope is that things improve from here on. Before we wind down, tell me about the Chennai plant. When does that get commissioned? Out of the total quantum that you wanted to spend, how much have you already spent and how much is remaining to be spent?
Yeah, so Chennai, we are targeting to start mid of the year. We'll start trials by August and maybe commercial production by Q3 of this year. And we have up till now spent 135 crores in Chennai, and we'll be able to start production with a total capex of 200 crores to begin with. And remaining 100 crores would be spent in next year. So that is about it.
All right. And what does that mean for your overall revenue this year and FY25? Because in FY25, you'll obviously have the full effect of the Chennai plant, and your Thailand plant will also go into full utilization.
So
FY24 and 25?
This year, the top line should be around 1100 crores. And for FY25, it should be 1350.
All right. And that number you gave on the Chennai plant, you spent 155 crores. So 45 crores are remaining.
135 up till now, and remaining 65 will start the production. And we will spend the balance 100 crores in coming years.
Okay, all right. Okay, and very quickly, are you a buyer in the stock right now? Because it's corrected so much from the top.
I'm always buyer. Whatever little savings we have, we keep investing in Rajratan.
Yeah, because as I mentioned, the valuations seem to not be in favor, but you have shown the faith in the past. So I thought I'll quiz you on that. And you've said that, with the
because we are long-term investors, so I don't look at the current price while investing.
And probably you'll be the best analyst of your own stock, Mr. Chordia. Thanks so much for stopping by. We'll hold you at these numbers, mild you, but you seem to have done a detailed analysis with your team, and you've given us some guidance. Thanks so much for joining in. For the time being, though,